Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the inverted yield curve, the potential for another Tesla stock split, and the latest on Roblox Stock. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The inverted yield curve is back in the news. What does that mean, and does it mean we're going to have a recession?
Well, good morning, everyone, and thank you for that intro, Allison. Obviously, you can tell we are on the road again, so bear with us if you run into any tech issues or background noise. The inverted yield curve is something that gets talked about whenever one of the longer-term yields is lower than a short-term yield. So in the case of what we're going through right now, where the interest rates, the short-term interest rates, which again, the Fed really, controls the 2-year interest rate, if you will. So things start increasing on the short term, but at the outer years where you would expect to make more money and get more yield does not go up. So most people can think of a 30-year as their mortgage yield. So right now, generally, you're talking the 2-year and the 10-year. That's where it generally gets inverted, and that's the flashing recessionary warning that is going to be talked about pretty much all day today on CNBC. And they'll have everybody come on and give the big debate on whether we do for a recession or not. Remember, we have almost full employment. That's a tough way to. We've never had that and gone into recession. Also, these warning signals for recession, like I always like to say, these signals predict like 39 of the last 5 recessions, right? So they always predict that recessions don't happen all that often, and nor do I think we're really on the cusp of one. But I want to show you this. This is a CNBC article right here. You can see this is, excuse me, the specific conversion. The 5-year Treasury note right here was at 2.63, while the 30-year was at 2.6. So that means if you loaned money to somebody, you would expect it for 5 years, you'd make 2.63 per year. If you did it for 30 years, you'd only make 2.6, and it doesn't make sense, right? You'd make more if you loaned it for a longer term. So that's why we're at the inverted. That's why everybody's going to be talking about it today. The 2-year, 10-year numbers are right here, 2.3 and 2.46. So again, not much. The further out you go on the yield curve, and then it's already kind of corrected itself. So this is a real-time Treasuries look. When you look at the 2 years at 2.317. The 5-year 2.548, and then the 30-year the 2.562. So they're not inverted anymore. So it's just a temporary thing that happened already this morning. So in summary, I wouldn't get caught up on this. These things tend to right size themselves given a little bit of time. But yeah. Recession will be the talk of the day. But no, I do not think this is going to be the driver that kicks us into a recession.
Next, Elon Musk spoke this morning about the potential for a Tesla stock split and initiation of a dividend. Is this going to happen? Is it good for the stock?
Well, anything that Elon Musk says is going to happen generally happens. So you do not want to take the other side of the bet, if you will, with anything Elon Musk says. But he did have some interesting commentary also earlier this morning about the 3 greatest threats to mankind, and some of it you've heard before. But Google that if you're interested. We won't talk about it here. But there he is right there, and it's an older picture, but. They want to split their stock, which they just did. You can see it's up 5% pre-market. They did a split in, here's the numbers, August in 2020, and that was a 5-for-1 split, and shares have doubled since then. So again, we talked about split with the upcoming Google split, with the upcoming Amazon split. It doesn't make any difference mathematically. So really you're taking, if you had a $100 bill and you did a 20-for-1 split, you would just have $25 bills. You still have the same amount of money, and in the stock market, you still have the same amount of equity in the company. Right, you may have more shares, but when you break it all down to the fraction that you have, the fraction is the same. Now, is it good for the stock? Yes. It appears cheaper if they did a 5-for-1 split. It's $1,000 stock right now, so that would take it back to a $200 stock. If they did a 20-for-1 split, that would make shares, a cheap $50. So things can appear cheaper. Now, what is interesting is the headline is, they want to split the stock so they can pay a stock dividend. Those are uncorrelated items, right? It does not matter what denomination your stock is in. Paying a dividend, if you did a 20-for-1 split, you would just pay a dividend of 1/20th of the dividend, right? Of whatever you had. So really, more hyperbole than anything. But do I think the split's going to happen? Yes. The dividend, I don't know. That's what when companies issue a dividend, that's a straight drain on profits, right? It's straight money out of your pocket and into the shareholders, which is good to retain shareholders. But from a business perspective, if you had, unless you're running out of ideas, you want to take all that extra money you have, put it under retained earnings, right? And then channel it into R&D, new products and services, streamlining operations, capital for CapEx, OpEx. There's all kinds of things you want to do with the extra money versus just sending it straight out the door. But maybe they, if anything, it might be the beginning of the end is near. Maybe Elon's looking at moving on from Tesla. That's total speculation. Don't quote it here, but I'm saying, why would they intentionally try to make their stock a little stickier by giving a dividend if there wasn't something major, potential negative headline on the horizon? So in sum, I think it's a great thing. I do think it's going to happen. I think it will continue to take a highly expensive stock, from a traditional valuation and make it even more expensive out there.
Last, gaming company Roblox earned a major upgrade this morning. Is ticker RBLX a buy, sell, or hold?
Well, Roblox has been problematic, right? As an investment standpoint, it's been one of our top investments for the past 3 months, 6 months, a year for some folks who got in early, and it's really done nothing but drop recently until recently, right? So it gets, even though it's its own firm, obviously, but it's caught up in the big sell-off in tech that we had. So it really doesn't matter how good Roblox is. If tech is selling off, Roblox is going to sell off with it. So at one point it went down over 50%. So you can hear Daewoo. I do not know if I'm saying that correct. Apologies if I'm not. Market leader in social gaming, that absolutely is true. I think that it is a brilliant business model. I think it's going to print money over the years, and it still remains a top investment. When you look at the chart, well, you can see that the kick this out to like a 1-year chart. It was on fire. Is at 75, flatline of 75 for a long time, jumped up to, over almost 135. That's almost a double. And then the house of crash, right? So this is, middle of November, if you will. And what's 135? Gosh, cut well over 50% and more towards the 70% level, down to these levels. I love it here. When you get into valuation, you have a problem. They're growing so fast, so they don't have earnings yet. Of course, no dividend because it's a tech firm. So it's a little ugly down here. When you think of their business model, though, and how many, millions of kids and some adults are in there building these entire, metaverse type universes that are virtual and spending money in there. There's Robux. I really think there's so much that's attractive for the stock that I think it's a clear buy. But hey, there's risk, just like crypto or metaverse or any of those things that it kind of challenge your brain for, is this going to happen or is it not going to happen? Or I don't understand it. Well, sometimes you just have to close your eyes and invest on the concept. And this is one of these. So don't get into it if you're uncomfortable or you don't like tech. But if you do, I think this is one of the best stories going forward.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.